Hey everybody, great to be with you today. My name is Brent Moors and it's time to explore thinkorswim. This is a weekly webcast where we go into some of the details on the thinkorswim platform to help you acclimate to it, help you understand more of it. It's generally, we consider this to be a little bit more of an intermediate term webcast, but I want to go from beginning to more advanced here, and we're going to do that today. I want to talk generally about studies and make you more adept at using studies, but specifically, I'm going to be talking about average true range today and using average true range and some of the features of using that as a study on the charts. I'm joined alongside James Boyd, who's helping me out in the chat. I appreciate James always. And make sure you check out James. He actually has a class on called Trading with Technical Indicators. It occurs on Mondays at 1 o'clock Eastern Time. Make sure you check that out. He talks about a bunch of different studies. Today, I'm just talking about average true range. But I'm glad that each of you are here. You can follow me on X at Brent Moors CS. You can follow James on X at James Boyd CS. Before we actually get into this, though, let me just mention a few things. One, the information today here is for general informational purposes only. Should not be considered an individualized recommendation or endorsement of any particular securities, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as sole means of investment research. The paper money application, which we'll be demonstrating today, is for educational purposes only. I'm not going to, I will be looking at individual stocks today. Remember, those are not recommendations. All investing involves risk, including risk of loss. Past performance of any security or strategy does not guarantee future results or success. And stop loss orders. We'll be mentioning stop loss orders today. Remember, stop loss orders do not guarantee an execution at or near the activation price. I appreciate each of you joining us today. Each week we go through different topics in this class. And so for those of you who want to go back to past topics, I'm going to put a link to the webcast in the chat. To those of you who are watching not live, but watching on a recording, here is the URL. Let me just do this. There's a couple URLs, but let me just start off with this one. Here's the URL you can use. I put that in the chat. Also, just go to the playlist there on that. And just go to Trader Talks, Schwab Trader Talks. Go there, and you'll see the playlist for not just this class, but all our various classes there that you're interested in. That's probably the easiest way. Bottom right portion of the page, there is a button to subscribe to Trader Talks. Okay, so let's head on over to the thinkorswim platform, because I know that's what we want to talk about here today. When we talk about studies, adding studies to charts, for example, I have a moving average on the chart here. That moving average on that chart is a study. There's a lot of different studies. Some studies are like trend studies. That's an example of a trend indicator that, you can use it for different things, but people will often use it as a trend indicator, a moving average. That's an example of one type of indicator. Maybe you'll see other kinds of indicators. In fact, let me just do this. Let me go up to studies and let me pull up an RSI. Here's an RSI, which is a different type of indicator. This is an oscillator that people will often use as more of a momentum type indicator. That's a different class of indicator, momentum type indicators. And, RSI or MACD is very similar to a RSI in that regard. And so these are all different kinds of indicators. One type of indicator that we don't talk about as much probably are volatility indicators. Okay, they're volatility indicators. And so that is something we're going to be talking about today, because the ATR is a volatility indicator. And so what do we mean by that? It's just kind of how much the stock or whatever index you're looking at. Here I have Google up, but let's do the SPX. How much movement up and down is there on this? And one way to do it is called an average true range, commonly abbreviated ATR. Okay. So what do we do this? What is ATR? ATR is basically how much a stock moves, the range in per day of a stock, but you have to include the gaps in the calculation. Because if I just look at the range here on any of these days, look at, say, for example, the R right up there stands for range. If I look at that, sometimes you get a stock or index gapping, and that's not included in that range figure. So it actually, the ATR will typically be a little bit bigger than if you just went back and did an average of what the daily range values would be. Okay? So, but it gives you a sense for how volatile something is. So for example, if I take something like GME, just as an example, here's GameStop. Let's see what our ATR is here. We can bring up the study. You can bring up the study. Go to the little flask up there at the top of the page. Click on that little flask. Let me get rid of the one we had. And there's one that just says ATR right there. I'm just going to double click on that and bring that up. Click on apply and click on OK. Here's our ATR. I can make that a little bit thicker just so you can see it a little bit better. I'll make that a 3. Let me apply that. And there we go. So let's see. This is moving, on average, we'd say moving about $5.50 a day. Okay. That's a heck of a lot, folks. Going back over the past 14 days is the default on that. Well, look, it's 14 days going back, and it's only a $23 stock. $23 stock moving on average $5.50 a day. That's crazy volatile. So do you see how this can be a big indicator? Now, $5 ATR may be a lot for this, but you find a stock that's a $500 stock, that's not that much. But this gives you an idea of the volatility of it. So when we're say for example, we're setting a stop loss. And remember, stop losses don't guarantee to get you out at a certain price. But if I want to set that stop loss, where do you set the stop loss? You can look below a support level. How much below the support level? Okay. Or you can look below the low price of the day, for example, for a stop loss. How much below the low price of the day? 1%, 2%? Well, if you get a very volatile stock like this, 1%, 2% probably is practically nothing. Okay. Okay. So he was saying, why are we looking at this stock? I'm using this as kind of the extreme illustration of how big a ATR can be. Most stocks, your ATR is not going to be that big. Let's take Coke. I use Coke a lot as an example. I don't know why, but here's Coke. It's just an example. Let's pull. Here's our ATR, 0.65, 65 cents a day on a $60 stock. That's something where it's just not moving that much. Right? So that's the basic definition of an ATR. And why would we use it? Well, again, I think the most common reason is you looking at stop losses. Let me give you an example. Let's pull up Apple. Let's say we were looking at Apple and considering a trade on Apple. Okay? Maybe we're trend traders. Well, the stock's been trending up. Okay. How can you know? Well, it's giving me higher highs, higher lows. You can throw on a moving average if you wanted on that. Remember, if you want to add a study on thinkorswim, just go up to the little flask right up here, and you can add your study. If I do a simple moving average, I'm just going to pull up simple moving average on the left, and there's a default is 90. You can modify any of these studies. Click on the gear. I'm going to make that a 30 period moving average. I'm going to change that 9 to 30. Click on OK. Actually, make this a little bit thicker. We'll make that a 2. Click on OK. Now I've got that moving average I'm going to add. Notice I have that ATR up there. I already showed you bringing that up, but there are settings on ATR you can change. Let's click on that little gear. And notice the ATR look back is a 14 period look back. So if I'm looking at a 6-month chart with daily data, 14 days. If I'm looking at a 3-month chart with daily data, 14 days. If I'm looking at a 1-year chart with daily data, 14 days. But if I go to, say, a 1-minute chart, or excuse me, a 1-day, 1-minute chart, this would actually be looking back 14 minutes of time. So just be careful on your time frames, okay? So there we go. So you can change that. This is just the average, moving average. I'm not going to tweak this. The thing that you may tweak more, although typically, to be honest, when I teach, I just say leave it at 14 days, okay? 14 days, right up there, okay? You can make the color different. I have this kind of, I don't know what color that is. Violet color, lavender, I'm not sure. And I changed the width on that. There you go, okay? So we're going to click on OK. To add those to the chart, yeah, you just go, you click on the little, just right there, that little flask right there. And then you can add, these are all the possible indicators. There's a lot of indicators on the chart you could use. You want? You're not going to use them all. You're not going to use most of them probably. And on any one chart, you may only use one or two, maybe none. But this is where you can add them. Double click on it, it'll bring it over to the active set. Okay, we're going to click on that. There's our ATR. Maybe I'm looking to say, look, I have maybe a support level here. Okay, let's draw a support line. Okay, I'm going to draw a support line right there. You see why I drew that line right there? We peaked out right there. We bounced off it. We broke through it. We went to that same level and bounced off that. There's my support. What's that at? Right about 187, okay? Roughly 187 is my support level there. Let's kind of look and get a sense for what an ATR below that would be. Well, ATR on this is about 330. So if I take 187, subtract 330, that's about 183.70, I think. 183.70. That would give me a stop roughly, it's not going to be exact, but we're going to say right about there, okay? There's a stop. Doesn't guarantee it, okay? Doesn't guarantee we're going to stop out at that point, but does this seem to you, and this isn't a right or wrong answer, by the way. This, some people may say it is, some people may say it isn't. This level right here, is this a reasonable stop level? Because using the 1 ATR below my support, that's where my stop level would be. All right? Now, a short-term momentum trader, that may be too loose of a stop. Okay? A long-term investor, that's probably too tight of a stop. Okay? So you need to judge, but one approach, there's a couple variables we can use here. One is, where are you setting? Are you setting the ATR below support level, or are you setting it below maybe the current price or the low price of the day? Okay. So if we take 1 ATR, okay, so what's 1 ATR? 1 ATR on Apple is 330, right? 1 ATR on Apple is 330. That, if you're putting 330 below, say, the low of the day, that would be a fairly tight stop. Okay, a lot of traders would consider that to be a tight stop. Probably more appropriate for more like a swing trade, a momentum trade, something like that. Okay, that you're not going to be in the trade very long. Okay, I'm going to write MOM. It's not for mom, it's for momentum. Okay, 2 ATR. Okay, that's probably a fairly typical trend trade. ATR, okay? Typical. Doesn't have to be. Okay? And that'd be like below the low price of the day or something like that. 3 ATR, we're going to call that, I'm going to call that guy loose. Okay, kind of a looser stop, likely to leave you in the trade a little bit longer there in that case. All right. So, question in the chat. Let me address some questions. One, how did I get these lines, these dotted lines? These are just the drawing tools, folks. These are just drawing tools I'm using. So if you want, you can go up to drawings and go to drawing tools. And this is the line I did. It's just dashed because I customized mine to make it a dashed line. That's your choice. If I right click on it and edit it, notice I can make this line right here. It's style, I have mine dashed. Okay, fair enough. Just your preference. You can go down here, drawing tools at the bottom of the page. You see at the bottom of the page there, bottom right, there's that. I can click on there. There's my drawing tools. Okay. Or if you have one of those mouses, I don't know what the plural of a computer mouse is. But if you have a mouse that has one of those roller wheels on it, then you can just click on that and you can do it just like that. Okay, fair enough. Let's move on. Okay. So there we go. So if we're going to set a stop, we could just say, hey, I'm going to place this trade and set my stop at 183.82. I can right click on my chart, buy custom with stop. Here's my trade. And we said 183.82. Okay, 183.82. Now you may be saying, is there an easier way? Is there an easy way to do it? Way to automate it? And the answer is, yeah, I'm going to show you how to do that, but that's a little bit more advanced. So I wanted to get this through this first. 183.82 is my stop loss. Doesn't guarantee we're going to get out at that price, but I'm going to make that good till canceled. Make sure your quantity makes sense here. I have 100 shares. That's $18,000, almost $19,000 worth of stock. Maybe that's too much for you. So what you can do is you can change that to however many shares you want. Okay. And then here's 10 shares instead. I can click on confirm and send. Buying 10 of Apple. There's my stop. That's my 1 ATR stop. Okay. Let's look at another example. Okay. And then I want to do a trade here and show you some different choices here. But let me go to Alphabet or Google. Okay. Let's say we have a trend up here on this, and there's my ATR, and I want to for our purposes here, I want to set a target and a stop. A target price above where it is and a stop. And by flag, this is what I mean. What the stock's been doing, it goes up and it pulls back, goes up, pulls back. A little kind of a weird one there, but it went gapped up, pulled back, up, is pulled back. Now, what if we say, I want to do a 2 ATR target up here and a 1 ATR stop right there. Okay, that would give me, and I'm just going to go from the current price. Okay? That would give me a 2-to-1 reward to risk ratio on that. Okay? Can we do that? Yeah, we can do that manually. Look, 350 times 2 ATRs, 2 times ATR is equal 7. Okay, 2 times 350 is equal to 7. And 1 ATR, that's going to be our stop, is going to be 350. All right? Okay. So let's do the math here. Currently, we're at I'm just going to make the math easy. I'm going to say we're at 176. 176 plus 7 is 183. That's going to be my target. I'm going to take 176 minus 3.5 is going to give me 172.5. 172.5. That's my stop. Okay. Let me just jot this down real quick because I will quickly forget. 183, 172, 172.50. If I wanted to do that trade, put that trade on using ATR, which again, it takes into account the volatility of this stock. I can right click on it. I can go buy custom with OCO bracket. That means I'm buying the stock. I'm putting a target price in. That's my limit to make that good till canceled. And we said, if I can get that to fill, 183. That's going to, if we hit 183 or more, that should trigger and try and fill at 183 or more. Our stop, if we hit 172.50 or less, it should activate that stop. And we can also, of course, change our quantity to what we want here. I'm going to make this 10 shares. But notice what this does. This gives us a 2-to-1 reward to risk ratio on that. Now, does it mean, is that guaranteed? No, because look, Google could come out with, Alphabet could come out with terrible news tonight. Terrible, horrible news. And it could gap down to $120 for all I know. Does that mean we're going to stop out at 172.50? It doesn't, okay? But that's a consideration on these, is consider your stops, consider your targets, consider your reward to risk ratio, all right? Now, is there a way to visualize this on a chart? Yes, there is. There's a script, there's a study script that we have here, and I'm going to share that with you, okay? Let me just, it's a special script, and I'm going to throw that in the chat for those of you who are live. For those of you who aren't live, it's right here. And I'll show you what it is in just 1 second. All you need is the last 7 digits, by the way. TYOACRM. It is case sensitive, though. So you need the capital Y, capital O, capital C, capital R. TYOACRM. I put that in the chat for those of you who are watching live. That's called the ATR on chart. In other words, you're saying, well, the ATR already is on the chart. But if you want to visualize this, look at this. You're going to like this one, I think. ATR on chart. It's just, look, apply, boom. No, do you see this? In fact, let me get rid of this other one. I don't need this anymore. I'm going to click on apply here. This gives me 1 ATR above the current price and 1 ATR below the current price, okay? That's pretty easy to visualize it, isn't it? And see if it makes sense to you to use that. Now, it's just like other scripts. Let me go up to that flask up there. It's customizable. I can click on here and I can say ATR. If I want to go 2 ATRs instead of 1 ATR, okay, and I can make that 2 ATRs or something like that. All right, there we go. And again, it's 14 bars back. All right, 14 bars back is 14 bars of data. All right, let's do this. Let me go and so we talked about that, and that's a way to visualize it. It can help you decide on target prices or stops, and using that ATR on chart. But here's a question that I often get is, hey, what if I want to have that ATR and I want that to move up, okay, with the stock? And I want to visualize that. Let me show you a different study here. By the way, this shows you the ATR right up there on this. So let me get rid of this, and let me show you a different one entirely. And this one, actually, next one I'm going to show you is not custom. It's not a custom script. It is a actual, it's one that's available to everybody. It's called ATR trailing stop, okay? I'm going to right click, I'm going to double click on that, bring that up. We're going to apply that here. And notice what this does. This shows the ATR, but in the form of a trailing stop. So let's talk about what a trailing stop is, okay? Let's talk about what a trailing stop is. A normal stop, you put in your stop price, okay? If you just do a stop order or stop market order, you put in the stop price, and if the stock goes up, that stop price stays put, stays right where it's at, okay? But sometimes what people say is, look, if the stock goes up, here's Alphabet. Alphabet's going up. If the stock goes up, I want my trailing stop to move up behind it. In this case, it's doing that. Now, what's the gap here? The gap is an ATR below the high price that we've seen, okay? So as you achieve new highs, that ATR moves up, okay? As the stock moves up and hits up new highs, the ATR is going to move up. Now, Is this a new high? No, this was not a new high. It wasn't here until then. It goes up, 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 up. Now we pulled back. We're not achieving new highs. That ATR stays where it is. Okay. That stop, excuse me, stays where it is. So that's a trail stop based on an ATR price. So what you can do is, if you want, is you can set an alert on your stock to let you know if we break down below the level, or you can actually set a trade to trigger based on that. I'm going to show you both of those here. Okay. So let me just, before I do that, let me just go up here and let's just look at this. ATR trailing stop. Let's look at the configuration of this guy. ATR factor, 3.5. Okay. So that's 3.5 ATR. So that's a little bit bigger, but it's a trail stop. So it moves up anytime that stock hits new highs. All right. So they tend to trigger fairly quickly, which is why we want a bigger ATR factor on that. Okay. This also isn't the 14-day look back. It's only a 5-day look back on there. By the way, if you see studies here on this that you are unsure of what they are, there's these little question marks right here. So if you want to read more about it, ATR trailing stop, click on the little question mark right there. See that? It's going to tell me something about it. Right? Fair enough. Okay. So there's my ATR trailing stop. Okay. The question in the chat is, hey, can we use it in orders? The answer is yes, and I'm going to show you how to in just a minute. But before I do that, let's look at this ATR trailing stop. And let's say we want to just set an alert if this stock goes below our ATR level. Okay. Is that possible? In other words, when this, you see the green dots here on this script? Here's the green dots. When it changes to the purple dots, that means it crossed below the low price here. Okay. Similarly, if you're looking for an ATR above, it's when the purple dots change to the green dots that it breaks it. So we got green dot, green dot, green dot, all green dots. We haven't pierced below it, but let's say this stock were to go down here tomorrow, then what we'd see is it turned to purple dots above it. Okay. So let's talk about setting an alert on this. Well, we've talked about doing alerts. In fact, last week we talked about alerts. Check that out. But what I'm going to do is I'm just going to right click on the chart and I'm going to create an alert. Okay, I'm going to create an alert. And in this case, I'm going to alter it. The default is the most common type of alert, which is just the price. But I'm going to go instead to mark. I'm going to go to study and I'm just going to edit it. Click on edit. And we're going to say, I'm going to edit this kind of default one that we have up. If the closing price is less than what? The simple moving average? No, not the simple moving average. Less than a study. The study is going to be our ATR trailing stop. ATR trailing stop. Okay. And it gives me the different things. And it's talking about a long trade, which is a bullish trade here, basically, is how it is. ATR factor 3.5, which is exactly what we had set up before. And then if I click on save, and okay, and create, I now have an alert based on that. And you should be able to see that right in your alerts, Market Watch alerts page right there, okay? If this is for Google, this is what we just set up here. There's my alert on that. That will activate on that. Now, just as a reminder, we went through this last week, but if you haven't set up notifications on your screen and you want it to go to your phone or your email address, you do need to go to your gear up here, go to application settings, and go to notifications right up there, okay? You can add your email address, you can add your phone number on there, your cell phone on there, okay, for a text. Okay, what if we want it to trigger buying? We actually want to buy at a certain point or sell at a certain point. Maybe I'm in a position And let me just go to see what we got for a stock position. I've got in this paper money, I've got Amazon, 100 shares of Amazon, okay? I want to get out of this based on that. I can right click on it. I can create a closing order. I'm just going to click on this. Now I'm going to modify it. I'm going to edit this guy, but I'm going to say market good till canceled. I'm going to go to the little gear here. In other words, when are we going to sell Amazon? Well, right now we would just sell on market. It would sell instantly pretty much if we entered this, but we're not going to enter that right now. We're going to click on the little gear. It's going to bring up a window, brought it up in my other monitor, so I'll bring it on over. And we're going to say the conditions are if Amazon, usually on this I'm using mark, but in this case we're going to do the same sort of thing. We're going to go to study. We're going to edit. I'm going to edit it. If the close, and in this case, is less than our ATR trailing stop there, okay? And there we go. This is the default set there, okay? So let me click on save and then click on OK. All right, click on save. Now, in the chat, Eva said, market and GTC don't like each other. You're correct, they don't. If you just do market GTC, it's going to say something to the effect of market orders need to be day orders or something like that. But once you add conditions to it, that error message should go away. You see that? So I have conditions on that. Click on confirm and see. And let's read this. Study-based orders can carry special risks. Look, we're at the mercy of the study that we've created, okay? It doesn't know whether the study is, it likes our study at this point or not. So it does that. We don't, with stop orders, it's a stop order. There's no guarantee the execution price is going to be at or near the activation price. Amazon could gap way down tomorrow, okay? It probably trigger because we'd be below our ATR trailing stop. However, we probably wouldn't be getting anywhere close to what the ATR trailing stop is right now, okay? We can save that or we can send that order, okay? All right, so I just sent that order and now on Amazon there, you know what? I messed up on it and let me go through and see what I think I know what I did. I know what I did, folks. Well, this is why we do it on paper money to start here. Okay, let me do this again. I'm going to do this on a different one. I didn't switch it from long to short to get out on that. So if we are, let me just go and look real quick on this. And I'm going to go to messages. If it's less than the ATR trailing stop, yes. And what I did was, this is what I did. Let me go. On the trailing stop study, let me just do a different one. We'll do Southern Company. Okay. On the trailing stop study, we'll do Southern. We're in this. We want to get out. But look at this here. I'm going to right click. I'm going to sell well, let me just do it from here. Monitor, right click, create a closing order. We're going to sell this and I'm going to do the same thing. Market, good till canceled. If Southern, study, edit, is less than trail stop, there's a long or short factor in there, okay? I had to switch that, I think. Let me just double check that. Save and OK and save. Confirm and send that. Same rules apply on that one. So let me just show you on this chart, on this study that we have here, where I messed up on it. I'm going to go to this gear. Notice on this study, it has first trade long. I had to switch that on to sell, okay, for my sell position. I needed to change that to short, okay. So just went through that a little quickly. Okay, now let me go back and I just want to address some questions, okay, because that's basically what I want to show you in terms of this study here. I'm going back to the top of the chat here and just seeing if we can see any here. Let's see what we got here. Scan. Is there a way to scan for insider trading on thinkorswim? Answer is no, I don't believe so, unless they've added in the last little bit that I didn't notice. There's no insider trading scan on thinkorswim. Thank you for that question. How do you save scans? You go up to your scans, go up to the little 3-line menu right here, and you can save your scan query on that. Let me keep going down. See other questions I missed. Oh, how do you do support? So look, you can call up support. I'll tell you what, one thing that I've used, and I will tell you, I'm just going to give you an honest assessment here. They're pretty responsive. They're pretty good at being responsive. Look, I have frustrations with support people across all the different products I use. You know, I call up for support help, okay? And sometimes it gets frustrating. These guys are pretty responsive. You click on support and click on create support request right there. And you just type in the chat and you do it. And usually, you know, just within a few minutes, you have a reasonable response with a knowledgeable person, okay? So that's how you do that support. Oh, there's a survey link in the chat, everybody. In fact, I'm just going to repost that real quick, okay? We appreciate your survey. We appreciate your feedback on that, okay? Other questions? Did I miss any? If I missed any, I saw someone having a JavaScript error. Sorry, I can't help you on the Java tech stuff. Okay, what is the use of good to cancel it is not applicable to post or pre-market? One reason why you don't want it applicable to post and pre-market is because post and pre-market, you get wild swings very often. So there's a danger if you're doing after hours trading on those orders there. Maybe that's what you intend at times. You can do that, but it's not all that it's cut out to be, folks. As someone who very often looks at after hours quotes, okay, you can see wild swings on very little news after hours. So just be careful on that, okay? All right, everybody. That's what I wanted to cover today. I wanted to go through studies in general and use a specific example, in this case, average true range, to show you just the basic study. What's average true range? There's different types of studies. We talk about trend studies, momentum studies, volatility studies. I wanted to show you the basic study. I wanted to show you how to add it to a chart, how to add a custom study to the chart, how to create an alert off of a study, and how to actually create a trade off of a study. We did all those today. Go ahead and play with that, practice, and if you're interested in previous sessions of this particular class, make sure you check out that webcast, that playlist that I mentioned to you before. I'll post it in the chat again. That playlist, I'll show you one more time. I'll just show you how to reach that playlist since I just have a couple minutes here. If you go to YouTube, type in Trader Talks Schwab. Go to Trader Talk Schwab. Go to the Schwab channel and subscribe right here, okay? When you go to that channel, go to playlists. Down near the bottom, you'll see Exploring thinkorswim. You also see a bunch of other fine sessions, including some by Mr. James Boyd. futures on Thursdays if you're interested. Okay, everybody. Hey, thanks for joining me today, and James for helping me out, and everybody have a great rest of the day. Coming up next, we have generating income in your portfolio. Okay, bye-bye, everybody.